Hi, Keelan. Welcome. So, to kick off with, you just want to share with us a little bit about your story and how Regan van Roy got going.
Sure, Paul. So I'm Irish, married to a South African, and I've spent kind of half my life in Africa, in different countries, and half in the UK and Ireland. So as a child, I grew up in Kenya. I did some volunteer work in Zambia. Then I qualified as an accountant in London, worked in Arthur Andersen, always in corporate tax planning. Then I met my husband, who was the South African. I moved to South Africa and was in Joburg for 12 years working at Sasol. And again, always in international tax, basically helping multinational businesses structure themselves. Then in 2000, so I've been with Regan van Roy since 2016. I founded it. And our vision was to set up a boutique tax and structuring advisory firm that would help South African businesses wanting to internationalize, and that would have at least the same technical expertise as the big four or the big law firms, but much more focused on the business, working closer with clients, and with a focus on entrepreneurs and growing businesses. So we've been doing that since 2016. I moved to Mauritius in the beginning of 2019, which makes it the fourth African country I've lived in. And the reason for our move here is that Mauritius is very key for any business wanting to structure in Africa. We also have an office in Ireland. So Ireland is, we often say that Ireland is to Europe what Mauritius is to South Africa, what Mauritius is to Africa. So for a typical South African client wanting to go into Africa, often Mauritius is worth considering. Not always the right answer, but it's often one of the best options. And for a South African wanting to go into Europe, Ireland is often worth considering. So that's why we have the offices in those three areas. We've now grown to about 18 people with offices in Joburg, Cape Town, Mauritius, and Dublin.
Oh, great. Awesome. So to kick off, just with regards to the questions, one of the common challenges most founders have as South African business owners is, should they be looking at setting up a Mauritian company or Irish entity? And if so, when should they start looking to do that?
Yeah, and Paul, we work with a lot of startups, and our general advice is that although in theory it's always better to structure a little bit too soon so that you have your storyline straight for your high tax country and have your IP move to your low tax country, in practice it's always better to structure a little bit too late, because the costs of setting up a structure and the complexity it brings are often underestimated by startups, and it's something that you shouldn't enter into unless you're sure, essentially, that your business is going to work and that it's going to have significant international reach, and that the international elements are going to basically outweigh the South African elements. So it's always a hard question, when should I consider offshoring? I think the first question is, the first part, to deal with your question of should we look at Ireland or Mauritius, that's always question number two. The first question is, should I internationalize my business? And it depends on a variety of factors, but the key one for us is how much of your client base are outside of South Africa. And a lot of startups have a very non-South African client base focus, which means that they have great scope to structure to ensure that you pay less South African tax on the offshore revenue. Once once we've answered that question, so basically, should I set up offshore? If you've got a lot of non-South African clients, essentially, probably yes. And then the second question is, where is appropriate? And again, that depends on a number of factors, including, and often most importantly, where your clients are, also where your senior resources can be found, and what makes sense in terms of South Africa as home country, if that's indeed what it will remain.
Okay, brilliant. So what amount of money am I looking at minimum to get going and run an international business in Mauritius or Dublin? Just so budget-wise, you've got to know what you're looking at.
So the answer to basically all international tax questions is it depends. So again here, it depends. If you're setting up in a, let's say, tax haven type country, so I mean like Mauritius or BVI or the Seychelles or Singapore or Hong Kong, a country that essentially its main industry is to try and get you to set up here, it's typically expensive to set up a business because that's how the industry makes money. So as you would know, in South Africa, you can set up a business on your own on SIPC for kind of 300 or 400 rand. In Mauritius, it's typically about $10,000. In Ireland, the UK, it's also very cheap. You know, a couple of £100, you can typically do it online. But the actual cost of setting up the entity is not the big issue. It's kind of like, I often compare the setting up of a business to getting married in Vegas. It's very easy to do, but and relatively cheap. Even in Mauritius, $10,000 isn't a lot, but it's the ongoing maintenance costs and the ongoing risks that you have to mitigate against. For instance, you'll have to appoint local directors and pay them. It's those ongoing costs that roll up. So I would say at the very minimum, you're looking at, for Mauritius, you're looking at about $12,000 a year, which would typically include a trust to hold your company, which typically founders would want to do. And if in Ireland, although the company setup is lower, your other costs like your audit, your company secretarial, your local directors would be similar. So I'd say like $10,000 is a fairly standard annual running cost for an entity. And that's just for the company secretarial setup and running of the entity. That's in addition to the advice you get from somebody like us to set up beforehand, which again, it varies completely on the advice. But if you're looking for a kind of start to finish plan on how to structure your entire business, including how you as founder own your shares, protect your assets, and optimize the tax for both the group and yourself, and protecting your IP and ensuring the transfer pricing is correctly set up, typically about $10,000 again for good advice to get there. So definitely not a small cost. And I think the other thing that we often caution founders about is the other costs. So the amount of management time it takes to, for instance, run a business in Mauritius or in Ireland. You're going to have a team member over there. You're going to have complexity in running 2 offices, renting a place there, getting the person to get used to the new country, travel costs, timing differences, the business costs that it takes by having a foot in 2 jurisdictions. That's often the soft cost, which can be much heavier, especially for a small business that doesn't have a big team and that doesn't have unlimited resources.
Caoilfhionn, how would you then determine who would be the right person to go with? I know that there's a sort of a huge variance in potential people to work with to help you get set up internationally. What advice would you give to a founder in choosing a service provider or advisor to help them set up this structure?
Do you mean a management company, the guys who actually set up the structure, or do you mean the advisor who tells you how to do it? Okay, so my first advice would be, do not start with the management company. So the management company's job is to sell you as many entities as they can in their jurisdiction. So they will, in my view, not give you the best advice on what's right for you. All they want to do, if you're talking to a management company in Mauritius, they'll want to set you up a company in Mauritius. They'll want it to be generally, you know, the most expensive company to set up and to run. And likewise, if you're talking to a management company in Malta, they'll tell you Malta is the best answer. So in my view, I would not start with the management company. In my view, and obviously I am biased, but I would start with a tax advisor. So again, actually setting up the companies, the legal entities, is getting married. It's something that takes 10 minutes and a little bit of paperwork, but that's not where the complexity is. Whether this thing will work or not depends on if you've chosen the right person to marry and you've chosen to do it in the right way. And that's what we work with the business to do, to determine the right structure for them. Now, we are a specialist international tax and structuring firm. That's all we do. There are many people who give international tax and structuring advice. And my advice to founders is to speak to different advisors and see who you feel most comfortable with. And it's like if you're going in for surgery, you want to kind of, it doesn't matter who's got the highest ratings or, you know, the best write-ups on the internet, although that's important. You want to know that the person who's helping you most of all understands your business and that they're not just trying to sell you a product. Often nowadays, and this was part of our vision in setting up Regan van Roy, and as quite distinct from the big four accounting firms, often we see that advisors want to sell a product. They just want to give you a report that's kind of a variant of something they've given to other people. You want to speak to your advisor and ensure that they understand your business and that they understand what your key drivers are. And to do that, they should be asking the right questions. Are you planning to emigrate in future? Are you planning to be with this business for the rest of your life? Are you planning to sell it? If so, who would you be selling it to? Who are the other stakeholders? What are their personal plans? Are you planning to give shares to employees in future? Check if they're asking the right questions to understand the DNA, not just of your business, but of the shareholders and their vision for the future of the business. Because with structure, it's, as I say, not that expensive to set up, but I mean, you know, relatively expensive, but it's very expensive if you have to chop and change. So with structure, you want to do it once and do it right. And therefore you want to make sure that you choose the advisor who understands you and who you feel has a clear idea of what your ultimate goals are, and obviously is an expert in their field.
Cool. So with regards to, one of the reasons is obviously if your company is going international, you want to look at setting up an international structure. Another reason is potentially if you're looking to exit the business to an international acquirer. Do you want to talk us through a little bit around that decision? When would it make sense to actually set up an international structure? What is the IP implications if you're looking to exit internationally?
Yeah, so a lot of South African founders have a growing business in South Africa that they hold via a South African entity, potentially also via a South African trust. And even if they're conducting international business, it might be in an international subsidiary beneath that South African business. So what that means is that their entire worldwide income is subject to tax in South Africa, must be converted into rand, is subject to exchange control restrictions. And it means that if you sell the business, the whole thing is subject to tax in South Africa. It also means that if you have IP in that business, that essentially you are prohibited from moving the IP out of South Africa. IP in South Africa has got very tight tax restrictions, but also tight exchange control restrictions. So if you're a South African-based business, it is critical that you become an international business with a South African element as soon as you can, if you want to mitigate the South African tax cost, exchange control complexity, and restrictions about transferring IP. And then the whole timing comes into it. And you know, we always say practically go a little bit too late because of what I spoke about, the complexity in setting it up, the risks in doing it wrong, and then kind of making a very difficult situation for yourself. But essentially, if you have a lot of international clients, then often you're likely to be purchased or part purchased, or for your IP to be purchased internationally. I mean, that's just typically the way it works. And if you can structure your shares so that there is an offshore element, then you can have your entire capital gain tax-free, which is quite a, you know, which is a game changer for many founders who want to sell their business.
Cool. You spoke a little bit about the IP laws, and I think that there's been some recent changes around the loop structure. Do you want to maybe just give us a quick intro to what the South African IP laws do to make it difficult to transfer IP overseas, and then how would you structure for IP?
Yeah, so exchange control is this archaic system we have in South Africa, which means we cannot freely move capital outside of the country. It has been reducing over the last couple of years, And a big change happened in March this year, where what they call the loop prohibition fell away. Now, the loop prohibition said that, in simple terms, a South African person cannot hold shares in a South African company via an offshore entity. That's essentially what it said. Now that prohibition has gone away. So what it means is that it is not only possible to structure the offshore elements of your business to tax optimize them, it is also, in theory, possible to structure the South African elements of your business to mitigate the tax on them. I mean, for instance, what you can do, again, in theory, because it's in practice, it's much more complicated, but in practice, one of the biggest costs facing a founder in South Africa is when business ultimately becomes profitable, he suffers 20% dividend withholding tax. In theory, if you were told by, let's say, a Mauritian intermediary company, the dividend withholding tax drops to 5%. So the loop structure prohibition gives us a lot of scope for additional planning. Now, I would say for most of your clients, that's probably not that relevant, because most startups, certainly that we see, and certainly among the Civitas membership, they are very focused on international clients. So they don't really need to protect the South African growth so much, because what they can do is build a group narrative that basically ensures the international group grows and the South African group is, let's say, where the admin function sits, or all the back office functionality, which typically isn't that big in value. So that's quite a complicated discussion. But just to say again, the loop prohibition ended in March. That means it is now possible to hold your South African shares via an offshore company, and that can lead to tax benefits. In terms of your question on IP, the exchange control essentially prohibits the sale of IP that has been developed in South Africa to a connected person overseas. So if you're a South African business and you grow this amazing IP, and then you set up an offshore structure, or you have a trust of which you're a beneficiary in Mauritius or Malta or Ireland, you cannot sell the IP from South Africa to that trust or company, provided they're connected. And essentially they will be connected if it's anything to do with the founder or the business. It's the connected party rule is, definition is very, very broad. So that is quite a big deal. So what it means is, often what we want to do is to ensure that the valuable IP actually grows in another jurisdiction. Now, it is possible to sell IP to a third party offshore, provided it's done at market value and you need to get exchange control approval. But so I think the bottom line here is, if you're a founder and you have a business that has significant IP, you need to plan around it. Because if you don't, that IP is going to be in South Africa for the rest of your life, and it's going to be subject to 28% tax and probably 20% dividend withholding tax as well. And the earlier the better in terms of structuring your IP, so that we can ensure that the value grows offshore in a way that is tax optimized and outside of the South African exchange control regime.
Awesome, Caoilfhionn. So I think that covers the topics we sort of planned for today. Anything else you'd want to add before we wrap up?
I would say think carefully about who you listen to about structure. We have had lots of clients who kind of try to copy a structure their uncle told them about that worked in Bermuda, or that their friend did, last year in Mauritius. Structuring is not an area you can dabble in. It's a very technical area, very complex, and it's a place where SARS is now focusing basically all of its effort. SARS, they've set up this high net worth tax unit, and they're really focusing on exchange of information with other countries, including Mauritius, Malta, any of these kind of tax haven type places. So you have to be careful. Now, that doesn't mean that there is no scope for tax planning. I mean, tax planning is always going to be possible. It's always the privilege of a taxpayer to decide how to mitigate his tax affairs. But don't do a sort of Mickey Mouse version of it, because if you set up your structure wrong, you will spend more money and more importantly, management time and stress in trying to solve it than you would ever imagine.
Awesome. Thanks, Keelan. Really appreciate your time. I think there's some really valuable insights.